Hey everyone, it's Hamish from the Young Investors Podcast. Myself and Brandon are excited to bring you your weekly rundown of the latest business and investing news from around the world. Now, a quick reminder before we get into the podcast is that nothing in this podcast should be taken on as personal financial advice. If you're ever unsure about your finances or investing, make sure you reach out to a qualified financial advisor. But with that said, let's get into another episode of the Young Investors Podcast.
Well, welcome back, everybody. We are back from the United States of America, the USA.
We are back.
As Borat would say.
Yeah.
How you doing, Hamish?
I'm doing well. It's always weird to come back. It's weird to do these podcasts back over the internet with like a little bit of lag. It's just not.
Yeah.
It's just not the same.
No, it's not. It's not the same.
Yeah, but it is.
We've got. Sorry.
Oh, I was just saying. Yeah, it's good to be back. Yeah. Did you? How was your flight, by the way? Did you? You missed your flight to Brandon missed his flight from Melbourne to
Canberra. Oh my gosh. Our last week was messy. We got to apologise because there was no podcast last week, so we do have to apologise for that.
That's right,
yeah, we had a bad run of luck, didn't we, Hamish? So we were flying back over and Hamish, you were just not feeling great on the plane.
No.
And then the plane was delayed back to Australia, and then we had to fly around in circles waiting to land. So it means that when we landed in Melbourne, then I missed my flight to Canberra. And the compounding factor to all this was when we were at EDC, I got pickpocketed. So I lost my stuff. So I'm so thankful that at least I had my passport so I could at least get home. But I had no phone. I had no payment method. I was literally just using your card by the end of the trip. I do have to pay you back for that, by the way. But it's not a great time when you don't have a credit, when you don't have your cards, you don't have a phone.
No.
They stole a little bit of cash as well. It just makes you appreciate how hard things. So anyway, long story short, last week I was just trying to get my life sorted again. So we didn't podcast last weekend because everything was just such a mess.
Yeah.
But we are back now. So apologies for last week.
Yeah, apologies for that. Yeah.
We're back.
Yeah, and besides that, I was sick anyway. I mean, on the plane, it was weird because I thought I was just run down from the festival when we were on the plane. But yeah, when I got back to Melbourne, the past week I got a lot worse. So I definitely caught something on that plane. There was a lot of people coughing and stuff on that plane. So I feel kind of bad contributing to that. But our travel luck isn't great, but it was good. All in all, it was a great rounded trip, I think. Yeah.
Yeah, fantastic trip. Yeah, so thankful that we got to go on it, and super thankful to Seeking Alpha who actually sponsored the whole thing. So
yes, much appreciated.
And thanks to you guys for supporting that content over the last few weeks while we were over in the States. But yeah, life returns to normal. Hey, Hamish, life returns to normal.
We're back.
You feeling better now? You look like you're feeling a bit better.
Yeah, I'm mostly better. Yeah. I'm 98%, so yeah, I'm good to go.
Okay.
Good to go.
I'll
get
take
into some
98%.
finance news.
Woo! Oh man, it's so funny. We thought we'd have I suppose we do have a fair bit to talk about, but there is one news story that by far is dominating.
Yes.
And that is around the US debt ceiling. So we'll talk about the debt ceiling for, I imagine, a fair while today. So. We got some Elizabeth Holmes follow-ups. We're talking about Australian inflation.
Yep.
Nvidia stock. We'll have a chat about that. Mm-hmm. And if we get time, we'll talk about Uber and Alphabet a little bit as well. There's self-driving efforts.
Exactly.
Did you see the Waymo traffic jam that's been doing the rounds?
No, I haven't seen that actually. No. I'll
it's just like 10 Waymo self-driving cars that have just caused a traffic jam because they're all just like trying to turn, but they're like all just like glitching out, busted with each other. They're like really trying to figure it out. But they're just no one's going anywhere.
What a disaster.
So to call out a technician and get them all moved.
I wonder if one day you'll have like passengers of multiple autonomous cars just yelling at each other instead of the road rage being the drivers. The road rage will be like, fix your AI, fix it. What is he doing? Like it'll be from the back seat.
That would be pretty funny. Maybe it will turn into that one day. Who knows? Who knows?
Anyway,
all
with
right.
all of
Should we
that
get into it?
said, today's episode is sponsored by Sharesight, which is an application you can use to track the performance of your stock portfolio. So you can bring in all of your trades either automatically by connecting your broker, or you can do it using Excel or one by one. And when you do that, it will track all the gains and losses in your portfolio. So capital gains, dividends. If you have dividend reinvestment plans, it will do those calculations for you. Currency gains if you're buying shares internationally or you hold foreign currencies. And then you can also use Sharesight for when it comes to tax time, which is, of course, upon us in Australia. Sharesight generates up to 12 different reports that can be used at tax time to work out things such as capital gains, dividend income, and more. At the moment, you can try Sharesight for free by heading over to sharesight.com/young investors. That site's called SIGHT, sharesight.com/young investors. So use that link. You can sign up to a free plan and track up to 10 holdings for as long as you want, or you can use that link to sign up to a premium plan for more features, more reporting, better tax reporting for when your tax return is due relatively soon. And if you do that, you'll get 4 months off an annual subscription if you use our link, sharesight.com/young investors. So go check it out. And thanks as always to people who use that link when signing up and are supporting the podcast.
Yeah, exactly. So let's get started talking about this debt ceiling stuff. Hamish Hodder.
Yes.
It's certainly been in the news a lot lately. Certainly been in the news a lot. And we should say, for the record, we are recording this on Thursday morning in Australia.
Yes.
So in Washington DC,
It's like 6 p.m. or something like that, I think.
8:39 p.m. on Wednesday, the 31st of May. So that becomes relevant for later in the story because they are voting, I think, as we speak.
Yeah, literally as we speak, they're voting on a proposed bill in the House. So that's kind of one of the two houses of Congress. It has to pass both and then through the president as well. And it's currently in the Republican House. But yeah, they're debating it as we speak, which is kind of weird. They're working kind of late. Do they always do that? I've never actually paid super close attention to debates on the floor or anything like that. But certainly I don't think it'll get passed today for us, but it'll probably be tomorrow, which will still be before, if it does get passed, it'll probably be tomorrow before this episode goes out. So,
Yeah. So what are we even talking about, Hamish? Well, we are talking about the US debt ceiling. And quite frankly, the US is running low on cash and they need to raise this debt ceiling so that they can take on fresh debt and keep paying their bills. So I've made a video about this and it's already released. Will your video be released by the time? Yep. So we've both made videos about this topic. So I definitely encourage you guys to go and check out our YouTube channels for a bit more of an explainer. But I thought I'd pretty much go through what the debt ceiling is, how it's come about, what the problems are, and where we're at. As we know, in the US, they have a debt ceiling, and that is just it's a legal cap on how much debt the government can take on. So governments make money through taxes, and then they spend money. They spend money on all sorts of stuff: infrastructure, social programs, defense, like the military and stuff, healthcare, all that sort of stuff. If they make more than they spend, then of course they have a surplus. This usually doesn't happen. In reality, they tend to spend a lot more than they earn, and then they make up the difference by taking on debt. And they of course do this by issuing government bonds.
I was kind of looking at like the history of the US's kind of surpluses and deficits just to get an idea of what that track record is like. And if you look at the first kind of half of the 20th century, so the 1900s, it kind of is pretty, it's pretty mild. It swings a little bit from surplus, a little bit from deficit. And that goes until World War II, and then there was a massive deficit, which makes sense. But they actually kind of offset that by a massive surplus right after the war ended. So they actually kind of reversed the huge amount of spending they did, or the overspending during World War II. But then, since around the 70s, there's just been, you can look at the chart of the deficit and it's just gotten bigger and bigger and bigger. And it's never really since then gotten close to being a surplus, except I think in the year 2000, there was a minor surplus or something like that. So, but certainly in the last 20 years, especially with the huge amount of government stimulus needed during the global financial crisis and the pandemic, the surplus is the deficit has just gotten worse and worse. So that's kind of 100 years of like kind of what they're surplus deficits look like, which recently it's a lot of deficits, but it has in the past been a little bit more moderate.
Yeah. So the deficits, they mean that they have to take on debt, they have to issue bonds to make up the difference because they've got expenses. They need to make these expenses. So they need to take on debt to be able to service that. So the debt limit so we should say the debt limit is this number that is approved through Congress, and the United States can't take on more debt than this number. Right now, the debt limit in the US is $31.4 trillion. But they actually hit that limit back in January of this year. So since that time, Treasury have essentially been moving money around to make sure that everybody gets paid. When the bills come due, they can still pay them, but they're just shuffling money around. They're a bit scrambled. So we're talking like, when I say everyone gets paid, we're talking about, people on Social Security. We're talking about military personnel. Obviously they need their paychecks. We're also talking about bond holders, people that have taken on US debt and expect to be paid back. These are all people that the government needs to pay. Now, Treasury Secretary Janet Yellen said initially that June the 1st, so all this money shuffling is great, but on June the 1st, that was going to be the day that the US is going to run out of money. They were in a real tight pickle if we got to June the 1st. She later revised this number to June the 5th, but as you can imagine, June the 1st, June the 5th, there's not that much difference. It's still early June. That's the deadline. And if you look at the clock, that's exactly where we are, like right now.
Yeah.
So there was really a solution that needed to be found by this date, or else the US starts having to choose who doesn't get paid. So someone's not going to get paid, and they would be in a really tough spot having to decide who that person was. And if it continued, that would obviously turn into just a major financial crisis, because the US would default on its debt.
Yep.
I don't think the US has ever defaulted, has it?
It has
I don't
not.
think so.
It's never defaulted.
No.
And there's so many ripple effects that would kind of come from that. I mean, immediately, interest rates you would expect would probably go up across the board because the credit quality of the United States would go down. So people, want a little bit extra return in order to make up for that additional risk that now lies there, that potentially they will not pay you back because they may have defaulted on some of those bonds. And that ripples out across everything in the same way that the Federal Reserve raising interest rates ripples out across everything. So then mortgages go up, business loans go up, stock valuations go down. So it starts to ripple out across in the same way that as the Federal Reserve has been raising interest rates, which is kind of a separate issue, but as they've been raising interest rates, it has ripple effects, right? Mortgages go up, things get a little bit, people kind of cut back on spending. So it's certainly a situation that is uncharted territory, and you really don't know how people will react in terms of their continuing confidence in the United States as the reserve currency of the world and as this kind of, core business unit for the world, essentially. So, that is the problem. That is a big problem, is that the United States is the central pillar of the global economy. And having the central pillar default, no one really knows what would happen, but it definitely would not be good. No.
It would be a major financial crisis. In fact, the White House themselves said that they would expect the stock market to be halved in America in 3 months, and immediately there'd be 8 million people without jobs. So it would trigger quite a substantial financial crisis. So it's like America shooting itself in the foot if they can't get this debt ceiling raised. So the question is, well, why on earth hasn't this debt ceiling been raised yet?
Seems pretty straightforward.
And I should say that maybe as you're listening to this, there's a good chance that it has been. We just don't know because it's being voted on right now.
Yeah.
But for now, why hasn't the debt ceiling been raised? Well, the raises to the cap need to be approved by Congress. But the thing is, it's the Democrats who are in government that need to get the debt limit raised. It's the government's job to get this thing raised. But the Republicans control the House. So what happens now is essentially a huge game of political chicken because the Republicans have leverage here. They know that the Democrats need to get this done. The Republicans control the House, so they've got the leverage, so they can try and sneak in. Okay, you want to raise the debt ceiling? We can do that, but X, Y, Z. You have to do this, this, and this.
Yeah.
So it's a lot of leverage, and there becomes a lot of back and forthing.
Yeah, it's It's an interesting situation because, yeah, I mean, the debt ceiling's been raised, I think, 74 times since 1962. So this is a thing that happens over and over and over again. And sometimes it's what's called a clean bill, which is it's just a debt ceiling raise. They actually did 3 of those during the Trump administration that people kind of just didn't really talk too much about because they were just clean passes. But then occasionally, yeah, you have this situation, like you said, where one house is controlled by the opposing party and they can use that as leverage to get what they ultimately want. And that's the situation you've got at the moment, which is Democrats want a clean bill. They want it just passed, whereas Republicans want spending cuts to be baked into the bill in order to address the problem. And that's the kind of the standstill that you've seen. It's mostly kind of come to a conclusion over the past couple of weeks, but there's been bills that have gone through the houses of Congress that have just not succeeded. There was one, I believe it was a month or 2 ago. I'm not exactly sure on the date, but there was a Republican bill that went through the House. It passed the House, which was Republican controlled, but that's as far as it got. As soon as it got to the democratically controlled Senate, that it didn't even go up for vote. They just not even considering it. So that's kind of how it works. It's kind of like one presents it and then another one presents one. And hopefully this one that's on the table at the moment, I'm sure you've got some data on that. Hopefully this one is the one because, yeah, it's really today for us and tomorrow. So before the weekend is really where it has to be done. So, yeah, it's certainly 11th hour.
So we'll talk about how we've gotten to where we are today. So essentially over the past few months, Joe Biden has known that the debt ceiling needs to be raised, but it's now obviously he has to negotiate with the Republicans, and that really wasn't going so well. It did turn a little bit standoffish. The Republicans passed the Limit Save Grow Act, which included a $1.5 trillion raise to the debt ceiling, but Joe Biden essentially said this bill was dead on arrival, and the reason he said that is because while it did raise the debt ceiling, it also had a lot of these sweeteners for the Republicans. Like it was reducing the government spending by $4.5 trillion over the next decade. So a sizable reduction in government spending, which obviously Joe Biden doesn't want to do. He wants to spend that. So that one turned sour, but of course they do need to come to an agreement. Like this, they have to get this done. So over the past few weeks, they have kind of softened, and there's been more and more meetings trying to find some sort of middle ground so that they can, figure out something that they can take to Congress that is likely going to pass, that will get through. So obviously there's going to be some stuff in there that the Republicans are really happy about, and obviously the debt ceiling stuff for the Democrats. So that's right. The reason that this stuff is in the news, well, firstly, is because we're running out of time, but also last weekend, the president and the House Speaker announced that they had reached an agreement in principle and were now ready to take their agreed terms to be voted on by the House.
Woohoo!
So, yeah, thank goodness for that. So what's in this bill, you might ask? Well, the core of the bill is a suspension of the debt ceiling, currently at $31.4 trillion until January 1st, 2025. So a kick in the can down the road to 2025.
Which, importantly, is after the next election, which will be in November of 2024. So that's kind of why they picked the earliest date in 2025.
Yep. So it doesn't come up in the election talks. It also included, as I said, a lot of those Republican sweeteners. So the agreement would keep non-defense spending roughly flat in the 2024 fiscal year and increase it by 1% the following year. For the next fiscal year, the bill matches Biden's proposed defense budget of $886 billion, so that's the same. It would also restart federal student loan repayments after a pause that began at the start of the pandemic. The agreement would also rescind about $30 billion worth of unspent coronavirus relief money that Congress approved through previous bills. Republicans also targeted money that IRS was allotted last year to crack down on tax fraud. So the bill bites into some IRS funding. It rescinds $1.4 billion there. The agreement would also expand work requirements for the Supplemental Nutrition Assistance Program, also known as food stamps. And I think they were the main points. Yep. Were there any other major ones that you can think of, Hamish?
No, that's pretty much all I saw.
Yeah. So the Democrats essentially get this debt ceiling raised. That's their good thing, and then the Republicans get basically everything else.
Yeah. And I mean, in terms of, I guess, the other bill that they tried to pass, it's barely anything. It's like scraps on the table of I mean, they're not really reducing spend, like they're making some minor tweaks, but they're really reducing the rate at which spending was going up rather than actually reducing spending, or certainly going anywhere near reducing the debt, actually reducing the debt. But this tends to be how it goes with these ceiling raises, because neither party wants a default. So it's not as if Republicans will just be super stubborn and let the US default, because that is catastrophic. So they'll try and push for what they want, but at the end of the day, both parties will agree. You would assume that they will be able to reach an agreement. At least they have every single other time in the past. So I guess we'll see.
And so this bill's now being voted on, and you've kind of had a look at some of the preliminary results. Is that correct?
I'm just so I'm bouncing between the document and watching the live updates, because there's really, how these votes work is they have a debate, they have a preliminary vote, which kind of senses where everyone's at. And then they have another debate, or they have a break and they have a debate, and then they do the final vote, which is where it's either not enacted into law, but it'll pass the House and then go to the Senate. So the preliminary vote has been done, and the yeses won. So it was 52 Democrats and 189 Republicans said yes, and the 158 Democrats said no, and 29 Republicans said no. So it was kind of an interesting mix. It wasn't purely party lined voted. You had significant crossover between the two, but clearly there's significantly more Republican support for this bill than there is Democrat, which does kind of raise questions as, even if it does pass the House, will it pass the Senate, which is controlled by Democrats? So that we don't know, and even in terms of the House, it hasn't passed yet. So that's just the preliminary vote. And as we're speaking, I think they're still debating. They have a 1 hour of debate. I think it's still going, but I'm keeping an eye out to see if the vote happens to pass or fail while we're talking. So I'll keep an eye on it.
Yeah, we might have to come back to it later in the podcast. We might do a check before we sign off.
Yeah,
to see what it says.
Yeah,
but, yeah, that's kind of where we're at, right? Anything else to add on the debt ceiling?
I think that's pretty much it.
I wish we knew the outcome, but by the time this goes out, you guys will know the outcome of this. I imagine it's going to be a yes, because the Democrats really can't afford for the debt ceiling not to be raised. Like, all hell breaks loose if the debt ceiling doesn't get raised. I think they were talking about some sort of enacting some extreme measure to keep paying their debts. If it didn't get through, there's like one more thing they could potentially do.
Yeah.
I can't remember exactly what that was. So I guess there's that potential. But I mean, what did you say? It's happened every other time that this has come up in history. So it should also happen again this time, you would think.
You just hope that I think, by a number of measures, there's been quite a significant separation in the views of the two parties over time since like the mid 1900s, really, in the US. So every time these kind of issues do come up, it does get a little bit harder for the parties to agree to things. But yeah, you hope that it kind of that it gets passed. And I guess we'll see. But yeah, even if it passes the House today, whether it will pass the Senate, who knows? We'll just have to wait and see.
And there we go. We'll have to wait and see.
Yeah. I'll keep an eye on this throughout this podcast, and then we can potentially have some
with Hamish Harder.
Maybe have some. What's that? Biden's running through Congress naked. Hang on. No.
He's lost the plot. Oh dear. Okay, where should we pivot to, Hamish?
Let's go. Let's bring it back to the land down under. Let's talk about Australian inflation data, which came out this week. So we got April's CPI data that was released, and it wasn't exactly great news. Australian inflation has been on the decline month after month for quite a few months now. But unfortunately, that wasn't the case. In April, the CPI actually rose to 6.8% from the 6.3% recorded last month. So it rose, and it was quite a significant increase as well. In terms of the biggest contributors for inflation, housing has increased 8.9% over the last year. That's
Wowie.
6.1% increases in rent and 9.2% increases in new home purchases. And then even higher than that, electricity has increased 15.2% over the past 12 months. So housing is going up at a considerable rate. Food and non-alcoholic beverage was up 7.9% over the past year, driven mostly by dairy, which was 14.5%, and bread and cereal, 11.4%. So, if you don't eat breakfast, as I've said time and time again, you're shielding yourself a little bit.
from save some money.
From
Hamish's great money saving advice.
Yeah.
Do you eat breakfast?
Do you eat bread?
Well, stop
drinking milk.
Yeah. No eggs. Yeah. No cereal. How dare you?
Yeah, exactly. And then the last big category was transport, which was up 7.1% year over year, driven in the biggest part was driven by fuel, which was up 9.5%. So
Makes
kind of
sense.
interesting. In the US, you have fuel prices down significantly year over year, which is why their inflation rate is actually a little bit lower than Australia's rate. Whereas in Australia, our fuel rates have just continued to go up. So we haven't had as much of an impact, although they have come off from the absolute highs. It's year over year, at least it's still going up. And the last time inflation was in the healthy range is now 18 months ago, October 2021, which is kind of crazy.
Crazy.
It's it's a long time to be outside of the healthy range, and it of course speaks to why the Reserve Bank of Australia continues to raise interest rates. And this topic just infuriates me because it's just, I know I shouldn't let this, it doesn't get to me, but I just find it crazy because the media just continues to have no idea what's going on with this topic. And I don't really understand why. I think when I look at US inflation and US news outlets, there's a fairly balanced view on the potential outcomes for inflation and interest rates. Whereas you look at Australia and it just seems like nobody is expecting this to be a sustainable problem. Everyone's really expecting it to just go away really quickly. I saw an article from The Guardian 35 days ago, so like a month ago, and they said investors viewed the prospect of a May rate rise by the RBA at just 17% as a 17% chance, with the next move being a cut. So just 30 days ago, The Guardian is reporting that investors are expecting probably not a rate hike in May, which it did end up happening, and then a rate cut.
I don't understand. Maybe are we missing something? Because it just seemed like Australian inflation just keeps going up and up and up. And the lever that you pull to lower inflation is to raise interest rates.
Yeah. And
so it's so logical. I don't quite, maybe I'm missing something, but I don't quite understand how people can firstly be expecting rates to go nowhere, but then also think it's more likely that there'll be a rate cut when inflation is still like agonizing. You know what I mean?
Yeah.
I don't get it. Because I remember, when the last the last rate hike happened, the whole media were just like, we can't believe it. What are they doing? This is done. And I was just like, I remember we were talking about it. We were like, what? Of course it was going to. Of course.
Yeah, like who's setting these expectations? Like where are they getting their information from? I mean, it was crazy because it was, I say where they get the information from. It was NAB, Westpac and ANZ all saying that there wouldn't be a rate hike. Only Commonwealth Bank was kind of, aware of the fact that inflation is still very high. And it's not like we're claiming to know what inflation is going to do, but with inflation at almost 7%, it's almost not even a question that there's going to be at least another couple of rate hikes. because it doesn't.
It's nowhere near 2%.
It doesn't make any sense. I think, and I think a lot of people are kind of juggling. Well, if they raise rates, then my mortgage gets more expensive immediately, and you really do kind of feel that expense immediately. But to put it in perspective, at 7% inflation, which is the current rate, in just 5 years, your household's expenses will be permanently 40% higher, which is basically taking a 40% pay cut over a 5-year period, which is astronomical. And it speaks to why the rate hikes are going to hurt in the short term, but it's going to prevent your wages essentially compounding down for half a decade or a decade or even more. I mean, the 70s, 80s inflation crisis went on for an extremely long period of time. And we certainly don't want to go back to that, which, in part was caused by easing monetary policy too early. There was kind of one spike that took inflation to the mid-single digits. They raised rates, then it started to go down. They lowered rates, and then it surged into the mid-teens. So we want to prevent that because, I'm talking about 7% inflation is, 40% increase in your expenses. But what about compounding at 12%, 15% for a couple of years? Very quickly, it's unbearable for people. So I really don't understand. I really don't understand the media narrative on all of this stuff.
Yeah.
I don't get it.
Maybe it's just like kind of bowing to what people want to see kind of thing.
I guess.
Like obviously like homeowners, they want to see interest rates go down. So maybe it's the media strategy for them to be like, oh my God, can you believe it, everybody? They put rates up again. Oh, I feel for you. We're all in this together. This sucks. We hate the RBA,
Yeah, I don't know. Maybe it is that. But yeah, it is crazy. It's really strange. So for context, the next rate hike will be next Tuesday. So it was expected that there would not be a rate hike. Now it's expected there probably will be a rate hike. I think that's pretty reasonable. It'll probably be a 25 basis point rate hike as he's done kind of every month recently. I think it probably should be a 50 basis point rate hike. But
that's kind of what Jerome was doing at this same kind of point in time.
Yeah. But we'll see. But yeah, it's just a story that just blows my mind every time it comes out because not only are the mechanics of how this works relatively simple, I think, you can also look to the US, which is kind of 1 year ahead of us in terms of how they've handled the inflation crisis. We're just a little bit slower on rate hikes and our inflation is a little bit worse. But there you go.
There you go. That is Australian inflation, is it? Anything else?
That's it.
No. I was trying to think of a segue, but I just can't. Let's talk about Elizabeth Holmes. That's my segue. Not a lot to talk about with Elizabeth Holmes.
Yeah.
Only update. Did you see this?
I didn't. I haven't seen what's happened. The last thing I saw was she was trying to not go to prison, and then she did she bought herself a nice piece at the New York Times where she rebranded from Elizabeth to Liz Holmes. Did you see that?
Right.
Yeah, she.
It's more personal now.
I'm pretty sure this is a bit, by the way, but I'm pretty sure the New York Times just takes just for legal reasons. I'm pretty sure the New York Times, you can just pay them now to just get an article that makes you look good, because they did one on SVB that was like, oh, he just made a mistake, and they did one on Elizabeth Holmes as well, which is just crazy. I mean, they were talking about how she has kids, but she had the kids while she was on trial.
Hard-working American.
Like, I don't know. Anyway.
Yeah.
I don't know. I just have no sympathy because she's trying to get a lot of sympathy out of the fact that she has kids, but she had the kids while she was on trial when she knew that she was probably going to go to prison for fraud. Like, I have no sympathy for you. Oh. Anyway, sorry. What happened with her?
At least we know what to do when we inevitably get cancelled for something.
Yeah. We go to the New York Times. Exactly.
Yeah, exactly.
We pay up $10K for an article, whatever the hell the rate is these days.
I reckon it might be more than that. Anyway, no, we're not suggesting at all that
that's a
news
bit.
organizations take payment for for publishing.
It's a complete joke. It's a joke. That was a joke segment.
Complete joke.
Anyway,
my whole life is a joke. All right, moving on. Elizabeth Holmes. The only thing I was going to say about this is that she has in fact gone to prison. You can't go. Oh dear, oh dear. All right, Hamish is clapping. Hamish is cheering. What does it say here? Theranos CEO Elizabeth Holmes reported to prison on Tuesday to begin her more than 11-year sentence for defrauding investors about the capabilities of her company's blood testing technology. U.S. District Judge Edward Davila ordered Holmes to surrender no later than 2 p.m. local time Tuesday at a minimum security facility in Bryan, Texas, in a ruling earlier this month. The ruling followed a day after an appeals court rejected Holmes's bid to stay out of prison while she appeals her conviction. Holmes, 39, here you go, has 2 young children with her current partner. This is a tug on the heartstrings a bit. Has 2 young children with her current partner, William Evans. Her second child was born earlier this year after her sentencing in November of 2022. Hey, that's what you were saying. A federal jury in San Jose, California, convicted Holmes on 4 accounts of defrauding investors in Theranos, the company she dropped out of Stanford University to found in 2003. In another ruling this month, Davila ordered Holmes and former Theranos executive Ramesh Balwani pay $452 million in restitution to victims. The Holmes saga began when she dreamed of running hundreds of laboratory tests with just a finger prick of blood. The idea was to make blood tests cheaper, more convenient, and accessible to consumers, but Theranos technology ultimately proved to be faulty and unreliable. Patients were given inaccurate test results relating to conditions such as HIV, cancer, and miscarriages. Man, that's so bad.
Yeah, that's why I have I have no sympathy
HIV
for
positive. Imagine being told that when you're not.
Yeah, I know. I have no sympathy. And she, at times they were using, they were just falsifying results.
Yeah.
I just have no sympathy for someone who does. I mean, it's one thing to defraud people, but it's another thing to defraud people. It's one thing to defraud investors who trusted you and you lose money, but it's another thing to, this has like real victims behind it.
People that have been told a faulty diagnosis from a blood test that they knew didn't work.
Yeah. So it's kind of crazy.
Yeah. Imagine. Yeah. Oh, by the way, you've got stage 4 cancer when you actually just don't have cancer.
Yeah. Or you don't have cancer and then you wait 6 months.
Yeah, when you do.
Oh, and it's gone from stage 2 to stage 4 and now it's terminal.
You're right. That would be.
There are real victims behind this.
Much worse outcome.
And I have no sympathy for this, but
fair enough. In closing arguments during Holmes's trial, prosecutors argued she chose fraud over failure. I think that's probably a reasonably good summary.
Yeah.
Chose fraud over failure.
There you go. So she's still appealing, I guess, but she's not been allowed to stay out of prison while she's appealing.
Correct.
So
I think that's correct.
I guess we'll see how these appeals kind of play out.
There's a little clip of her going, just like a paparazzi or something, just taking a little video of her actually going into the jail.
Oh yeah, was she playing tennis in there or something?
Yeah. No, she gets welcomed into jail and they give her a glass of champagne. Nah, hopefully not. You never know. I don't know how these minimum security things run.
Yeah,
it's probably pretty cruisy.
It's probably pretty cushy.
I don't know, but
yeah.
From what you kind of hear about them in the media, it seems like it's not the most vile of places.
No.
Okay, let's talk about Hamish Hodder. Fill in the blank. Let's talk about.
Let's talk about the latest meme stock. Shall we?
Oh, all right.
It's been a little bit of time between the latest. It's not really a meme stock, but I'm calling it a meme stock.
Hang on, just let me get my buy order ready.
Yeah, hang on.
Open my broker.
You ready? Is everyone ready at home? Pull up your broker.
Yeah, can you just tell me the ticker? What's the ticker?
Pull up your broker. It's NVIDIA. Actually, I don't even know. No, that's not even the ticker symbol. What's the ticker symbol of
I think
Nvidia?
it's NVDA. NVDA, I think.
And what you're going to want to do is take all of your savings and just click buy.
Disclaimer. No, Hamish, don't say that.
Put it all in there. No, don't do that.
Nothing that is featured in this podcast should be taken on as personal financial advice. We haven't taken into account your own your personal circumstances, so this is just for education purposes only.
Yeah, purely educational purpose. By the way,
this is a
great stock. No, I'm kidding. But yeah, it's been
nothing in this podcast should be taken on as personal financial advice. You made me do it again, Hamish.
It's been a while since we've had a meme stock to take a look at, and I think this is the king of all meme stocks, really, because
Really?
yeah,
Oh
I mean,
my gosh.
Nvidia is up 165% year to date and is now worth just under $1 trillion. So we have a stock
Wow,
that's
I didn't
surging
even know.
almost 200%. Actually, in the past 8 or so months, it is up 250%, I think. And it's $1 trillion company. So this isn't some small company. This isn't a GameStop, which was already quite big. This isn't an AMC. This is a big one. This is a big stock
chunky.
that's moving a lot. And it's not really surprising that this is kind of getting caught up in the meme stock hysteria when you understand kind of a little bit about what the company does and how they've been performing recently. A little bit of this is certainly related to the performance of the business. So Nvidia they're a chip maker, so they primarily design GPUs, so graphics cards. They're considered the lead chip maker when it comes to artificial intelligence, which is a little topic that's kind of had some popularity recently.
Did you just say AI?
Yeah, exactly. This is going to get pushed by the algorithm just for including that word. Machine learning, deep learning. Had some keywords.
Artificial intelligence,
Yeah.
AI,
No.
Elon Musk, ChatGPT.
Yeah, that's it. Yeah. Bard. What was the? No, you shouldn't say Chat GPT bad. Bard good. So that'll get pushed on YouTube now.
The YouTube gods will be kind to us.
No, but so Nvidia's kind of been known as for their GPUs that are kind of best in class for running deep learning algorithms. So they're getting a lot of purchase orders and there's a lot of demand and also just a lot of speculation around Nvidia's success as big companies, look to invest more in developing kind of AI models. Obviously the most popular has been this kind of language model, ChatGPT. And as more of these get developed by more companies, there's this growing need for graphics cards that process these kind of algorithms, very effectively. And Nvidia's at the front of that. So as a result, they've really been benefiting from a lot of the recent AI hype. And then all of this kind of really took off last week when the stock surged 30% in a couple of days after releasing better than expected earnings. So we can go through a little bit of their results. Revenue came in at $7.2 billion, which was actually down 13% year over year. So
wait, revenue?
Their revenue was down. Are you puzzling the reason why they have $7 billion in revenue and
$934 billion market cap?
Yeah, we'll get to that. We'll get there.
Okay, sorry.
We'll get there. But yeah, $7 billion in.
Wait, are you sure?
Yeah, I'm pretty sure. You can fact check it if you want. Maybe I pulled the wrong numbers, but I'm pretty sure.
Jeez. All right. 7.2 billion in revenue.
Yeah.
Down 13% year over. Okay.
But on the positive side, on the earnings side, they had $1.09 in earnings per share, which was up 28% year over year. And that was actually about, I think it was $2 billion in earnings for the whole company during the quarter. Which, we'll get there, okay? We'll build to the valuation being absurd. But yeah, it's absurd, okay? Here we go.
Okay, we're building. Sorry. I'll just relax.
I guess I can't really hide the fact that, they have $2 billion in earnings and they're worth $1 trillion. It's astronomically insane.
This is chapter one. This is chapter one of the book.
Yeah, we're getting there. I'm building a case for why everyone should buy. No, I'm joking. I'm not.
Don't make me say that disclaimer again.
We just have to play the intro every 5 seconds. But the big news of why the stock surged so much was their guidance, as it kind of is with a lot of these stocks. Investors care a lot about what's going to happen in the next quarter. So they actually are projecting $11 billion in revenue, which was 50% higher than what Wall Street initially expected. So they're doing okay this quarter, but they're expecting next quarter to be massive. Essentially, this comes from a couple of places. Nvidia's data center group reported $4.3 billion in sales, which was up 14% year over year. So their data center sales, which is primarily driven by GPU chips from cloud vendors as well as large internet companies, has been kind of surging. as a result of this demand for building AI models and that sort of thing. Their automotive division, which includes chips and software to develop self-driving cars, grew 114% year over year, but is a small part of their business, just $300 million in sales. But then their gaming division kind of let them down. The company's graphics card sales for PC sales dropped 38% to 2.24 billion. So bit of a mix.
Graphics cards are quite expensive, but obviously I don't know how many people are buying flash new gaming computers at a time like this, to be honest.
Yeah, you're exactly right. So yeah, it's interesting. They have kind of a mixed earnings, but the positive side is, or at least where their growth is coming from, is driven by this kind of AI hype, I guess, and investors are kind of taking that as a cue to load up on the stock, which, as we kind of already alluded to, has a fairly astronomical price. They, for the last 12 months, have produced just under $5 billion in profit, and they have a $1 trillion market cap, which is interesting. It gives them a price to earnings ratio of more than 200, which is a little high. It's just a smidge, just a little high. And one way I kind of like to think about these crazy price to earnings ratio companies, these crazy valuation companies, is to think about what would happen if the price to earnings ratio normalized over time, which most companies have a PE of 15 to 20. So if we assume that the ratio goes to 20 times earnings, even if Nvidia grew their profits 10 times to $50 billion a year, the stock price wouldn't have moved. And that just shows you how much speculation is baked into the stock. Maybe the price to earnings ratio won't go back down to 20, but I feel like that's a reasonable assumption that it will revert to the mean. And if that's the case, then if you're going to do even any positive return in the stock, they would need to more than 10x their earnings, which is crazy.
And they wouldn't be able to 10x their production. Like that's the thing. It's not like, I don't know, maybe, if you're some SaaS business, you're some software business, you're like, okay, maybe it is hyper scalable. But these guys are selling like chips, they're selling graphics cards, they're selling stuff that the other people that run the AI models, they take their products and then they make the scalable businesses. So it's like, if they actually were to sell 10 times as much product, they would have to open new factories. Those factories would take ages to spin up. That would cost billions and billions of dollars, I would imagine. Hundreds of millions, if not billions of dollars. Yeah. It just seems a bit wild. It just seems a bit crazy.
Yeah, and I mean that's why I said the meme stocks have returned. Because it seems, I'll admit it's not a business I've looked at super closely, and I'm sure there will be growing demand for all kinds of chips, given where society is headed. But yeah, certainly it's crazy to see a company producing $5 billion in profit, and they're worth $1 trillion. They're worth more than Facebook, I think, right? I don't think Facebook's $1 trillion company.
Yeah, true, probably.
So
just thinking the only other way they could 10x their earnings is by like 10xing the amount they charge for their products, but they just couldn't do that either. So
no, it's crazy. It's just crazy. It's I
don't know. I mean, maybe if somebody out there has done their DD on Nvidia and has a bull case for it, drop it in the comments. Like, let us know. I'd be very interested to see. Like, I think no matter what, you kind of come to the conclusion that it's a bit of a meme stock and that there's no way it's worth what was it, like $900 something billion market
trillion
cap. But even if there is like a bull case out there of like why it's worth, a high PE, maybe not $1 trillion market cap, but why it's worth a high PE, I'd be interested to hear it. I don't know like a huge amount about the company, but this does definitely seem crazy.
Yeah. Pretty much. So yeah, that's pretty much all I had for that one. I guess we'll see how it plays out. I mean, the story for stocks like this, the track record isn't great. You tend to have a significant surge. It's all exciting. It's interesting to watch, and then usually it either very sharply or slowly over time comes crashing back to reality.
Yeah.
But who knows? I guess we'll see.
Talk to me about self-driving, Hamish. On the
Yes.
kind of topic of AI and chips and self-driving, it's all kind of linked together, isn't it?
Yeah.
What's going on with Uber and Alphabet?
Yeah, so Uber and Waymo, the autonomous driving division of Google's parent company Alphabet. God, that's a mouthful. They have announced a partnership, which is interesting because kind of historically Uber and Alphabet have kind of butted heads a few times. They've had a few legal battles back and forth. There was I think there was some software engineer, I think, who was working at Alphabet, and then they went to Uber, and then Alphabet sued them for sharing trade secrets, and that person actually went to jail for 18 months. He was found guilty of sharing trade secrets. So there's actually been quite a bit of back and forth between these two companies, but they've decided to come together. So
beautiful.
Isn't it great? Yeah, I thought we'd end with a wholesome story of two giant corporations shaking hands. Wow, it's so wholesome. So
I'm sorry.
Waymo.
Two giant corporations. So wholesome. So good for humanity.
This is the kind of thing I read before I go to bed. Like, this is what this is what I'm going to read my kids before bed. Do you want to hear the one about Uber and Waymo?
Oh dear. All right, composure. And we're back.
So Waymo has kind of a self-driving taxi fleet that's kind of been mapping out a number of cities. And it's been interesting to watch because kind of Tesla's approach is get vehicles in as many people driving Teslas as possible and collect as much data as possible, throughout across America, and build a model that can drive in a variety of different scenarios. Whereas Waymo's approach has been, first of all, I believe they're using LiDAR instead of cameras for most of their technology.
As well as.
But their approach has been to kind of map out certain cities and just get the cities mapped out really well and then get approval to operate in those cities. And one of those cities that has been kind of the poster child of this is Phoenix, Arizona. So they've been kind of mapping this out for quite a few years now. And they have now Waymo autonomous vehicles operating in Phoenix, Arizona, within kind of a certain particular area. And the deal is relatively simple. People are now going to be able to hail these Waymo taxis through the Uber app. Pretty straightforward deal. You can order a Waymo by downloading the Waymo app if you're in Phoenix. And I'm not sure where else they operate, but I'm sure there's a couple other places. But now you'll be able to just find them on Uber, which is kind of cool. Brings the Waymo vehicles to Uber's audience. And it's interesting because Uber actually tried to build their own self-driving business. So they had a self-driving business in the early 2010s. They actually stopped the business in 2017 after they had a fatal accident, which they, of course, do not take responsibility for. But they ended up actually selling the division in 2020. So they tried to build something. There was a fatal accident, and then they decided just to can the entire operation, which is interesting because I think I have a question kind of to ask you, but I'm curious as where Uber fits into all of this when autonomous vehicles are everywhere, and what role Uber actually plays. Do they actually provide anything unique?
Yeah.
I'm not sure. Do you have any thoughts on that?
I don't know. I think it's going to be an uphill battle for Uber. Tesla have said, like Elon Musk has said, we will go into direct competition with Uber.
Yeah.
And I think, I'm not quite sure how they're going to do it, but I think Tesla has the advantage, certainly, of having all the hardware in their cars, having their cars mass manufactured, having their software. I don't know. Honestly, Tesla's not going anywhere. It's only a matter of time before they solve autonomy. I just think that Uber won't be able to provide autonomous ride sharing at the same kind of value that Tesla can. I just don't think they can.
Yeah, I agree. And it's hard to imagine what Uber's moat is after this shift happens. Because I was thinking, even just in regards to the deal with Waymo, they of course bring a large customer base to Waymo. They have their kind of brand reputation and they have this kind of network that already exists, and they can bring that customer base to Waymo. And I would imagine Waymo's probably paying them for this deal. But then, if Waymo ends up being far cheaper than just getting a normal Uber because there's no driver, then aren't they just accelerating the rate at which Uber customers become aware of a competing product that's better? Like, it's almost like it doesn't really make any sense to me from Uber's perspective. I mean, unless they're getting paid an enormous amount of money to do this deal, they're just basically showing their customers an alternative that's cheaper and
better.
the same, except that maybe it's less. There's less of them available, but it's certainly going to be cheaper, and it will certainly become much more available over time. So it doesn't really make any sense to me, how Uber survives in this in that world. But maybe I'm wrong.
Yeah, honestly, I think Uber doesn't know what their moat is.
Yeah, I think Uber doesn't know what the hell they're doing. Every time I look at that business's financials, I get confused.
Yeah, and they're trying to do something different. They're trying to add this or do that. I just don't quite think they... Like Tesla, I look at Tesla and they know what they're doing. And I don't mean that like, oh, they're super competent. I mean, they know where they're going. They have goals. Yeah. They know that they need to work towards these moats. They can understand where the competitive advantages lie. And they're just working really, really hard to get to that point. Yeah. And they will get to that point. But with Uber, I don't know if they've got those same... They seem scatterbrained.
Yeah.
They seem like they don't quite know where their business is going to be or what they're going to be.
Yeah. Well, I think the infrastructure, I think the biggest thing is the customer base, the brand, and the software infrastructure they've built. But it would be much better in the hands of somebody who owns autonomous vehicles. So it would make sense for them to look for an exit at some point, I think, to sell to a business like Tesla. But certainly they're not going to get that at their current stock market valuation. It would be, far lower than what they're trading for. Yeah. But I don't actually see how they compete against a Tesla or these other vehicles, when to me it doesn't seem like the difficult part is building the autonomous vehicle, not creating some software for people to, list their cars and for people to pick up rides. That seems like the easiest part of the entire thing.
Yeah. Anything else to add with Uber and Waymo?
No, that's just about it. No. So there you go.
All right, cool. Well, let's move on to some Q&A then, because we are quickly running out of time, as always happens. As always, guys, if you want to ask a question for Q&A, head to the most recent version of the podcast on YouTube, drop it in the comments, and we'll answer it. Or you can leave a question in the question box on Spotify.
I've been talking for a while, so let me ask you one. Should I ask you this first one?
Sure, go for it.
I know you guys have covered books you recommend more than a few times during the question time on podcast. Is there a place I could find a list for these? Do you have a spreadsheet or a document that covers your recommended books and the ideas behind them, e.g. New Investor, Value Investor, Interesting Reads, Classic Finance books, etc.?
I do not have a spreadsheet or a list for this. However, I am going in the show notes. This is a little bit hush-hush. All right, you guys, it's a little secret. There is a Google Drive out there. Whether it's legal or illegal, I don't know. And I'm not here to judge. I'm just here. I'm just the messenger. It's not my Google Drive, but it is a Google Drive, and it has loads of free investing books, PDFs, all sorts, and they break it down. I'll open the link right now. They break it down into like all sorts of different styles of investing: short selling, options, long term. There's also like if you just want to learn about Wall Street, hedge funds. There's so many different types. So I am going to, and there's like hundreds of books in there. So I'm going to leave that linked in the show notes. Just if you guys on the off chance wanted to have a look. But no, I don't actually have my own list or anything like that.
Yeah.
Do you?
No, I don't have a list specifically. Yeah, it'd probably be something good to put together actually.
Yeah, it would
just
be.
to
Maybe we'll do
for
that
people. I should
over
put
the
that on
next
my
little
website.
Yeah.
Yeah.
Investing books.
Or-
Yeah, they'd probably do pretty well.
Think about that. All right, that was a short one. Let me give you another one.
Okay, sure.
Let's just, I guess we'll just keep going down the line. Question for the pod. What brokerage do you guys use for trading international shares?
I really only buy shares over in the States. It's either here in Australia or over in the States. So in Australia, there's a broker called Stake that I have partnered with in the past, but I just like their platform, so I use Stake. What about you?
I just use ComSec.
ComSec
has an international component and it's fairly reasonably priced. There's a lot of
that's
options.
Just like for those that don't know, that's the share trading platform for Australi's biggest bank, Commonwealth Bank.
Yeah. But yeah, I mean, there's a lot of different
sorry.
options. The two splits really are you can go with an international broker platform like Interactive Brokers, or you can go for a smaller broker, which probably will give you cheaper brokerage fees, or you go with one of the 4 major banks where you'll pay somewhat of a premium above some of the other brokers, but you have the physical branches you can go into if you need to speak to someone. Customer support. So that's really the trade-off that you're making between brokers. So yeah.
All right, let's do one more. And this is one we're kind of chatting about a little bit before the podcast. Am I correct in thinking that when companies do buybacks, they buy back Class A shares? Or am I wrong? And what's the difference? Yes, you can get a lot of different classes of shares.
Yeah, I mean, different companies will have different classes of shares that might give or take away voting rights for proxy events. They might even have kind of a management class of shares. But typically there's nothing stopping a company from buying back shares that are publicly traded. So, Meta, for example, has publicly traded A shares, just A shares, I believe. And they have management traded. They have management B shares, which are not publicly traded. So when they're buying back shares, they're buying back the A shares. Whereas an Alphabet, for example, Google has 3 classes of shares. They have A, B, and C. And the A and C shares are both publicly traded. So they can buy back either of those shares. A shares have voting power and the C shares have no voting power. So if they're publicly traded, they can buy them back.
Yeah. How many shares Meta has a dual class structure?
Yeah, I believe they're AB.
Meta has 2.2 billion shares of Class A common stock outstanding. Yeah. The stock represents 1 vote per share and trades under the ticker META. Yeah, so that is their A shares.
Yeah.
Meta has 402 million shares of Class B common stock. The Class B stock represents 10 votes per share and is owned by Zuckerberg, management, and directors. Yeah, which gives them control of the company. So they would be buying back their A shares.
Yeah.
But I imagine I don't quite know, but I imagine if, like, say one of the directors that owns Meta B shares wanted to sell out, they
convert to A.
They convert down to A. Okay.
Yeah.
Okay, that makes sense.
Yeah.
And then they sell them. Yeah. Okay. Yeah, it makes sense. All right. Well, that is just about us out of time. Thank you guys very much for tuning in as always. Just a quick little reminder again, if you have a question you want us to answer, go ahead and leave it on the most recent podcast episode and we'll chuck it into our Google Doc. And yes, we better delete "you are doing the right thing, Hamish," so that we don't answer the same question twice.
I feel like we've done that a few times.
We've done that probably a couple of times. But yes, we'll sign off here, guys. Thank you very much for listening, as always. Hope you enjoyed the episode. Anything really, any feedback, comments, questions, discussion topics you want us to cover, just let us know in the comments. But apart from that, guys, we will see you all, and I mean it this time, we'll see you all next week.
See you guys.